In this video, I want to take a look at Euro's price action on Friday and just walk through how we might have traded that particular day. It's all hindsight analysis. I did not trade this particular setup on Euro. I was more focused on gold, as you can see on my community there and my videos in the channel. But let's have a look at some of this on the Euro because it'll be a great lesson and it'll help you understand price action behavior. Okay, so higher time frame daily analysis, we are bullish on the Euro. I think we're coming close to where we need to be. I don't know if we need to take out some of the liquidity resting above there. Only time will tell. I'm pretty neutral now on Euro until we see more price action to kind of determine where we might be headed. Okay, but for Friday, we can see that if I'm looking at the market on a Friday, and this here is Friday, I'll just make this chart bigger. Okay, so that's Friday, that's Thursday, and this is Wednesday, quite a big range day on Wednesday, and there is a bit of imbalance. So the first thing that I like to do is just mark out what is the 50% of that large day, right? That large up candle, because that is essentially where the market may come back down to kind of rebalance some of that inefficiency, because this is all buy side price delivery. Okay, so we can see on Friday we did get down to at least, well, we got down a little bit more than 50% of that large up candle, which was on Wednesday. Okay, and then we had an immediate rebalance. We went straight back up. Okay, so I'm going to zoom in on this day, and there will be, if we're bullish, we want to trade in line with the higher time frame. Okay, so that right there is something I will look for as a entry to go long, and my target would be back above previous day high or above current day high at that point in time. So let's jump down now and look at that in more detail and have a think about what could we have done based on what we see in the market. So I'm going to drop down into a 5-minute chart, okay, because I'm trading intraday, then that's kind of the time frame that I look for entries, okay, and timing is going to be important here, okay. So as I said, there's that 50% where the market kind of needs to go back down to for rebalancing. So if the market, I'm just going to jump back into the daily time frame. We opened, right? So we opened here, okay, and I want to see some kind, if I'm going to go long, I want to see some kind of retracement, right? I want to buy somewhere low. Like I want to buy somewhere at the low end of where that day may be at. I'm not going to long at the open or I want to be under the open, okay? So let's go back to the 5-minute chart, and I'm going to show you, if you see this kind of price action, then using what I teach you here in this video might be a way for you to be able to forecast future price action behavior. There's that line, and I just want you to notice how we come down into that line and then we go back up, okay? So that's important. Now, what are the signatures that we can use to help us perhaps forecast where we might be able to, what's the safest entry? Where would the institutions be taking along in this particular market on this day? Now, where would I be taking it along? That's what I want to teach you, okay? And again, this is all hindsight, but this repeats, and I think I've done live videos on these types of models with other pairs. If I haven't, I'll certainly do a live trade case study for you in the future where we can see this in live action. Okay, so let's just say this time's important. This candle right here is 3:30 a.m. That is the time when the London equities market opens. That's the key time to trade. That's the key time for entries and exits in London, 3:30 a.m. Okay, so here at 3:30 a.m. we can see the market drops. Okay, and this is pretty close to the opening price. We haven't really moved anywhere, right? Where's Asia? Asia's somewhere up around here. Okay, so regardless, London takes us down. Okay, and this is important with what we see on the left, and I'll make references to these up candles when we start to move up, but they are important. I want you to notice that these up candles are being formed on the way down, okay? And we can see we've come down into this level, which is 50% of that large up candle on Wednesday. Okay, that's a key area. That's basically an area that may be an area where price will hold and we may see a reversal, okay? So we have this down move with this consolidation, right? So let me make sure, let's just mark out these levels. So we have consolidation here, okay? We have a down move, right? And then we have another consolidation, okay, and then we have a move up. That's important because that is a model where you have the key turning points. Whenever the market is consolidating, there's a potential turning point. If it's at a key time like 3:30 New York, well, then you want to kind of see what's going on, okay? The market goes down and you have another consolidation, so that could be a key turning point, and then the market goes up. When the market's going up, clear target would be back to these highs, okay, or some higher time frame target, wherever that might be, but the initial target will always be the high from where this move down started, okay, and you can establish that once you start moving up. So how do we enter? Where is the safest place where institutions might be looking for longs, okay? So clearly from this initial consolidation, there is clear price displacement to the upside. So there's no guesswork here. It's very clear. There's very clear price displacement from this consolidation. Where is that? Right? That is these up candles here, right? There's no secret about that. No secret about that, okay? There's no question about that. that is price displacement moving away from that consolidation at the bottom. That's when you want to get interested. Now, here's the secret. Here is the key. I want you to notice these candles here, these up candles. I'm going to draw a box around them because they are going to be the secret, okay? They're going to be very important. So I'm going to take the low, the high, I'm going to project it up. Have I taken the low? I haven't taken the low. There we go, the low of there. So I've taken the low, okay, let's just make this bigger, and the high of those candles there. What's going on there is on the way down, institutions, market makers, they are buying. Each one of these up candles is where they are buying on the way down. You'll get to know this with experience and practice, okay? Look at when we go through those left up candles on the left side. This is the left side and this is the right side, okay? So once the right side is beginning to form, and you can clearly see that we have price displacement after that consolidation. So there's no doubt where might that be. Once you go through those two up candles and we come back down into those up candles, look at the bodies. Look at how well those two up candles, that range, look at the bodies of the candles, how well that's been respected. That would be my initial where I want to find long setups, okay? That will be where I get interested into perhaps entering in a long position for a target, minimum target, back up to where this move started going down, okay? So let's look at this up candle. I'm going to draw a box around that. Each one of these up candles on the left are going to support the market on the way up on the right side. Notice we go through that up candle, we come back down, and notice how the bodies don't even get in there, but we can see we have support in that zone, and we continue. Look at the candles here. We continue to find support, and then we have a strong, because this is the last part of that move, you're going to expect rapid price displacement. It's going to want to reach quickly up to there, which is our target from where we initially got in, which may have been here. And that is a very easy 20 pips, okay? Now, smart money reversal is basically in this consolidation. There are signatures in here where I would look to get in once I see this liquidity take, okay? So, but the easiest is to wait for price displacement, wait for a pushback. You want to get a breakout of that consolidation, pull back into this key level on the left for a continuation, okay? And this is very safe, low risk, because your stops are going to be, if we take this gap, if you have a gap underneath, then that's even better, okay? Your stop will be under the 50% of that gap if it's there. If there's no gap there, then just try to find a level. For me, if there's nothing that's clearly a place where I can put stops beneath, 15 to 20 pips is kind of where I want to have my stops, but that's based on your own trade management strategy, okay? But in terms of price action behavior, which is what we're learning here, once we see this left side selling end, which should be at a level that we have predetermined, which here for me was 50% of that large up candle, okay, on the way down. So from Wednesday's trading, we established that there's a large up candle, and we took the gap, right, from the high of the wick on the day before and the low of the wick on the day after Wednesday. There's a gap where we've only had buy side price delivered, and we are looking for the market to retrace 50% of that particular inefficiency, which the market does, and that's predetermined. Before we get to Friday, we have this printed. Wednesday's printed before we get to Friday, right? Thursday's printed before we get to Friday. So on the night of Thursday, when the market closes, or the market opens on Friday, we can establish what that range is to identify that gap, and we can draw this line on our charts before Friday market even opens. And that's where I will be looking for with the market to come down and reverse. It may not come down to that. There's no guarantee it'll come down to that. Okay, we could have easily just opened and continued higher. But if we did come down to that, as we did on Friday, then that would be where I would be looking for potential reversals based on price action. And I've just explained to you on a 5-minute chart what you can do to identify. So you have to have a level on your chart predetermined at where this sell side may end, and then you're looking for confirmation, okay? So we've come down, we've gone up, and now we're finding support. There's other signatures that I will use down here to look for reversals, but the easiest, without question, is to wait for price displacement, okay? And then you're looking on the left for up candles to then support price on the way up, okay? Now, what else can we use to our advantage on this move down? Well, you use time, right? Use time to your advantage. We started down move at a key time. That was 3:30 a.m. London. And we have this displacement up and move back down. When? What's the time? Always look at the clock. Very important. When do we get this? Let's have a look at the time, because that's the ultimate secret, is time. That candle, that down candle, which is the lowest down candle in this move up, that's supported here by this left-hand side, that is 9:40 a.m., which is within the 9:30 to 9:45 15-minute candle, which is a very key time, okay, for the market. Highs and lows are typically formed at 9:30 a.m. New York time. That is the New York session. 9:30 is the New York equities market open. So time is very important. You need to have time on your side. That's another level of confluence, okay? We've had the market go down. We've had this dump, okay? The market typically dumps before it goes higher. It's a dump and pump. We have a level predetermined on our chart where we are looking for market reversal if we get down there, right? This is discount pricing at this level, okay? We see consolidation. and we see price displacement, all within that New York session. And at 9:30, we can see we have a point of interest, okay, that indicates to us we are now on the right side, right? We've now gone through the sell side, consolidated, hit the discount level. Now we see price displacement, and all we're looking for is where is price going to give a low risk opportunity for price to now reverse, and that is at that level. So it's price, okay, and time 9:30, okay. So it went down. Initial dump started from 3:30 a.m. very key, and now the pump is from 9:30 a.m. again, very key. Okay, so a lot of things mentioned in this video. Go back and study this pattern. This is a very common pattern that I see all the time. Some kind of initial consolidation, okay, at a very key time, like 3:30 a.m., move down to a level that's predetermined, discount pricing, okay, then a reversal through price displacement and a pullback into a key price point from that whole move down, and at a key time, which is where that pump now begins, from 9:30, and a key immediate target would be all this liquidity that's resting above. Okay, look at all those equal highs there where people have shorted the market. Okay, and now we've gone down and pumped back up straight through all of that liquidity that's resting above there. Okay, now you can be a little bit more nimble if you are well versed in reading this price action, right? We can look at what's known, you can look at where some of the institutions are already getting in. Again, this will take practice to identify this level, but notice these down candles here, okay, where everybody who may be buying in this consolidation has been stopped out, okay, because the market has gone down, right, to stop out anyone that may be thinking of taking longs here, okay, and there might be more orders on the left. So those down candles, which are bigger than any other down candles inside of this consolidation, are important, okay? So that to me is a key level, right? Those down candles, you can see, once we get above, you got to really look at price. Once we get above, so if I draw a line there, let me draw a small line there. Once we get above those down candles, why those down candles? Because those down candles are energetic. Inside of this consolidation, okay, those down candles are energetic and they are big, and they are designed to manipulate retail traders when they see that, and they would be very fast. They'd be moving very fast. Retail traders see that as that's a breakout to the downside, and they want to get on that move, and immediately we start to move up. Okay, as soon as I see that, we go above those down candles. I then look at what's going on, and the market's pushing back down into those down candles, pushing back down into and pushing into the 50% level, which is our discount pricing. Okay, so all of this is important, and you won't really be able to identify this unless you've got a lot of chart analysis hours behind you, right? It needs practice, and you've got to be nimble, and you've got to know what you're looking for. Okay, but notice those are the only candles after this consolidation that are large. And if you were watching this live on a 1 minute chart like I do, I have multiple monitors, and one of my monitors is on a 1 minute chart on this key pair like gold, euro, Aussie. Okay, you'll see that was a very fast move down. Okay, and so once we get back above those down candles, then I want to see the market pushing down into that, not just the down candles, but into this 50% level. And why do I want to see that? Because there may be people, retail traders, who have longed from that low, and the market is trying to scare them out of their positions. And this is also where institutions, right, this little consolidation here is where institutions, after we get a move back above this these down candles, this is where institutions are accumulating their orders. Okay, and this is all within New York. Okay, New York opened at 8 a.m. right? Now, if we jump down even further, let's go down into so that's where I typically enter. It gives me a better entry, okay, from that level. It's not just entering at the discount pricing, it's seeing all of this. That gives me a 8 to 9 pip advantage over anybody else, okay? And that means I can have my stops very well defined under these lows, okay? That's only a 5 or 6 pip stop, but I don't use such a tight stop. I usually put at least minimum 15 pips, maximum 25 pips, okay? But that's for you to work out. This is more about price action behavior. I'm going to drop down into a 1 minute chart, okay? Let's find where we are, because you can further refine these entries, okay? So on a 1 minute chart, you can see here we have a big down candle, okay? Very easy to spot. It didn't take me long to find that, okay? Look at this consolidation. We go through all that consolidation, going through that consolidation, which we see on this down candle. That's important, okay? So it's not these down candles, right? It's making sure it's the candle that's most energetic that goes through the consolidation, okay? That's what we're looking at, okay? Once the market trades back above, this is now on the 1 minute, okay? Once the market trades back above that area there, okay, we can see the market trades above that. I'm now looking for price movement down into that down candle. We can see that's what's going on here, okay? Multiple, we've got 3 down movements into that down candle and into this 50% level that we've already drawn, predetermined from our Wednesday's trading, okay? So now I'm not expecting that, because now we have short sellers trapped in the market and we have an immediate reversal. I'm not expecting the market to let these folks out. And all of that, if we look at the time, okay, that's in the New York session. So I'd be looking to get long around there where we're hitting that 50% level. I'm not going to get long as we go down, taking out this liquidity, okay, because we could keep going lower. Okay, I want to wait to see price trade back above those down candles, okay, indicating to me that now we have short sellers trapped in the market. Okay, I'm not expecting the market to go down once we start to see this price action, which we are hitting that discount level. Okay, so I'll be getting short somewhere in that zone after seeing at least we've hit that 3 times. Okay, so I'm not expecting you to understand that price action in real time down at a 1 minute or a 3 minute, but I've given you a very clear way to identify that price displacement, which we can see here on the 1 minute and back inside that key zone, right? 5 minutes probably a good time to be watching because that'll make it easy. So you don't need to be nimble down here, okay? That's for people who have the chart hours of analysis behind them and have experience and are very well versed in price action behavior, okay? You don't need that. Go to a 5 minute chart and identify the price displacement that I've shown you, and then look for confluence on time, okay? And go back and watch the video so that you know everything that I've mentioned here, okay? So go back and study the charts, find these. You can find these everywhere. I can find these multiple times a week on multiple pairs, okay? But you need to find them at the right times and study where they may form, okay? Hope this video was useful. I will now talk with you in a future video.